You believe RBI needs to front load hikes if the Fed is seen to be easing? It was supposed to raise the rates by 100 basis points, but it did it so only by 75.
There are two parts to it. Let me take the second part. Is this? I think many of us are not exactly understanding the scenario in the US. You need to. I mean, we are all aware that the election round the corner by the end of the year, and the single point mandate for the US Federal Reserve is to contain inflation. Period. So I'm afraid I don't think US Fed is going to put a brake on it. Yes, it was not 1%, but 75 basis point. But that doesn't mean that Fed will slow down. Can India afford to lag behind? And there comes the first part of your question, 50 basis point. As we speak, there are three schools of thoughts. One is rooting for 35, which will take it to 5.25. One is rooting for 25, which will take it to 5.15. That's exactly the pre-COVID level.
Yes.
But I am a great believer, or I belong to that camp, which I personally feel that RBI should go for 50. And if you want really for if you wish for soft landing the economy, you need to front load your action.
Can you explain why India needs to keep parity with US rates to keep the rupee stable? Because this is something that you mentioned in your column as well.
It's very simple fact. I mean, it's so like water flows downwards, money flows upwards wherever there's a higher return. So if US is hiking rates, so naturally the money will rush to US. It's not that the Indian currency has weakened. All the global currencies have weakened. Most of the global currencies have weakened because the dollar index is going up. So we have to match the US thing, but the gap has to be maintained. I mean, if the gap widens, then certainly we'll be in trouble, and which had been the case, rupee cost 80. But it is retraced. But as we speak, yesterday's trade deficit number, and if that's the trend, import bill is going up. There's virtually export is stagnant. So in that case, there will be pressure on rupee. And if the rupee starts falling, then the importers wait to bring their money back, exporters rush for hedge, and that creates more complications for the currency. So ideally, we should raise the rates, not in tandem with the US, like 75 bips by US, so that we should also go for 75 bips. But the gap between US rates and Indian this thing has to be maintained at certain level.
Inflation and rupee depreciations. What revision do you expect on the CPI and GDP numbers in the RBI's forward guidance? IMF has revised GDP downwards for India.
Yes, IMF has revised GDP number for the entire globe, including India, but still India continues to be one of the fastest growing major economy. So I think we are better off among the emerging market economics. We are better off. So there are pockets of hope, even though the growth is not yet solidified, but certainly we are better off than many of the emerging markets. I would like to believe RBI may not give any guidance on growth and inflation at this point of time. It will act and will explain its action, and then maybe in the next policy we will see. For the time being, probably, because our impression is this growth probably may come a tad lower than what RBI has assumed, and inflation also, incidentally, good story, may come a tad lower than what RBI has assumed. But will RBI commit itself again? Because RBI has changed the inflation number thrice since February. So can it afford to do that so fast and then again change? I think it will wait and watch, and probably in the next policy we'll see if at all it wants to change anything.
Do you foresee rates going beyond 6% this year?
No, I would not. For the simple fact is this: if you see the RBI's latest inflation projection, the fourth quarter number is 5.8%. That's by March 2023. So that's the 1 year projection, 5.8%. And now the trend is probably it will be a little less than that, 5.5% or so. So, all of us have been talking about the real interest rate, which means we need to push the rate up higher than the 1 year down the inflation projection. So if it's 5.5 8% actual relates to 5.5%. So ideally, it should be 6% interest rate. Then you get a 50 basis point, 0.5% real interest rate.
Yes.
But will RBI be in a hurry to do that? I'm not very sure about it. Fiscal year probably could be by 6%, but definitely not calendar year by December. I think it will keep a watch, and that's the question of nominal interest rate. Basically, you need to take the interest rate in a positive zone, which can be done only by raising it beyond the 1 year down the line inflation projection. So ideally, it should be 6%. But will it do it? I would like to believe RBI will be equally concerned about growth, so it will go slow.
Thanks, Tamal. Thanks for coming on the show. We hope to have you back again. Thank you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.